The Relative Strength Index, also known as the RSI indicator. This is one of the most popular and oldest indicators to ever be created. This indicator is both a momentum indicator as well as a trend direction indicator. What the RSI indicator is most known for is identifying overbought and oversold levels in the market. Whenever the RSI indicates an overbought market, we expect the price to come back down, and vice versa for oversold markets. But more often than not, this is what usually happens. An RSI indicates an overbought market, but the price doesn't come back down. Why? Well, that's a fundamental flaw of the RSI. Some would even call it an intentional feature. Whatever it is, it basically defeats the purpose of the RSI in regard to using it for identifying overextended markets. Which led me to wonder, what if there was a different version of the RSI that is specifically designed to factor in this issue? Well, enter the Trending RSI indicator, developed by Chart Prime. To add this new indicator to your chart, you want to go to TradingView, then load any trading security that you like. For me, I'm going to be using the 15-minute time frame of EUR/USD. After that, click on Indicators and type in Trending RSI, this one by Chart Prime. This tool is an advanced version of the traditional RSI indicator. It's designed to include trend information, which the conventional RSI actually lacks. This new indicator is considered better than the traditional RSI because the traditional RSI ranges between 0 and 100, but often fails to explain why prices continue to rise or decline during overextended periods. But this new indicator actually integrates trend information into the RSI, transforming it from a normalized oscillator bound between 0 and 100 to a centered oscillator with bands. Now, if we go over this indicator's components, we can see that we have this line that changes color between green and red. This is called the center line. The center line is actually different from the zero line. We have the zero line at the center, which represents the central axis point for this indicator's analysis. Whenever the center line is above the zero line, that is a bullish analysis, or basically indicates a bullish trend. Conversely, whenever the central line is below the zero line, that is a bearish analysis, or basically indicates a bearish trend. This indicator also includes a novel filtering technique to smooth out the bands. This can also be applied to the RSI for clearer signals. It also has a binomial moving average filter that helps identify market momentum by approximating a normal curve similar to the Gaussian filter. Now, in the settings of this indicator, we can activate the MA length and change the filtering value right here. This is the moving average filter. For the strategy I'm going to be showcasing here, we're not going to be needing that option, so we're going to keep that disabled. We also want to change the length to 20, the top range reduced to 60, and the bottom range increased to 40. After that, click OK. So this line, traversing the indicator window, is known as the RSI line, and then this purple line at the top is the 60 level. Whenever the RSI line goes above the 60 level, that indicates a super strong bullish momentum, which is also an indication for us to take long positions. On the other hand, we have this yellow line. This is the 40 level. If crossed by the white RSI line like this, that would indicate a super strong bearish momentum, and these are areas where we only want to be taking short positions. Now, this indicator is actually decent even on its own, but just like any other trading indicator, we can't rely on just this indicator for our strategy. We need to add an extra indicator to add extra confluences for taking positions. But before we do that, let's talk about the forex broker called HenkaTrade. Now, I've been using HenkaTrade for quite some time. As you can see here, this is my live account on HenkaTrade's web trader platform. The reason why I think HenkaTrade is a great broker is because of their low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of us who love high leverage, well, HenkaTrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,000, they're going to give you a bonus of $3,000, giving you a total of $6,000 to trade with. To access the bonus as well as all the other perks, well, sign up to HenkoTrade using the link in the video description. Now, back to the video. Now, to add the extra indicator that we need, we're going to open the indicator search tab and type in Market Structure Algo, this one by Omega Tools. We're going to be using this new indicator to identify pullbacks in the market. So these are the conditions for taking a long position. First, we want to confirm that the trend is bullish. To do that, which indicator do you think we're going to be using between these two? Well, we're going to be using the Trending RSI indicator by Chart Prime. We basically need the center line, which is this green line, to be above the zero level. The zero level is this faint dotted horizontal line right here. Whenever the center line is above this, it's going to be colored green, and that indicates that the trend is bullish. Now, the second condition is to identify a market pullback within this bullish trend. To do that, we're basically going to wait for this trend ribbon of the MS Algo indicator to turn from blue to red. And as you can see, that is exactly what happened here. This indicates a market pullback. To confirm the end of this pullback, we need the MS Algo indicator to print an upward arrow like this. This indicates the end of the pullback. Now, the third condition is to identify the most recent swing high and extend it to the right. We need the price to also close above the most recent swing high with the same candle that has this upward arrow. Now, once we have this, we look for our last condition, which is to identify the presence of a strong bullish momentum in the market. For that, we just make sure that the RSI line, this white line, is above the 60 level. The 60 level is this purple line up at the top. So we need the white RSI line to be above this line to indicate that the bullish momentum in the market is strong enough for us to take this long position. All our entry conditions are met here, so we take a long position. The stop loss goes right under the most recent swing low, but for the take profit, well, we're going to target a risk-reward ratio of 1 to 1.5, letting the trade run, and it was profitable. Now, a super important point to remember about this strategy is that during this pullback, so basically from the moment this trend ribbon shifts to red all the way to the breakout candle, the trend should be maintained at bullish. What that means is inside this window, you look down here and you need this green line to maintain the green color throughout this window. If at any moment it changes color to red, that would invalidate this pullback because shifting color to red would mean that a trend reversal may be happening. Now, to take a short position, we're gonna do the opposite of everything we just did for these long positions. This is what I mean. First, we want to confirm that the trend is bearish. To do that, we're going to be using the Trending RSI indicator by Chart Prime. We basically need the center line, which is this red line, to be below the zero level to indicate that the trend is bearish. The second condition is to identify a market pullback within this bearish trend. To do that, we're going to wait for this trend ribbon of the MS Algo indicator to turn from red to blue. And as you can see, that is exactly what happened here. This indicates a market pullback. Now, to confirm the end of this pullback, we need the MS Algo indicator to print a downward arrow like this. This arrow indicates the end of this pullback. The third condition is to identify the most recent swing low and extend it to the right. We need the price to also close below the most recent swing low with the same candle that has the downward arrow. The last condition is to identify the presence of a strong bearish momentum in the market. For that, we just make sure that the RSI line, this white line, is below the 40 level. The 40 level is actually this yellow line at the bottom. We need the white line to be below this line to indicate that the bearish momentum in the market is strong enough for us to take this short position. All our entry conditions are met on this candle, so we take a short position. The stop loss goes right above the most recent swing high. For the take profit, we're going to target a risk-reward ratio of 1 to 1.5, letting the trade run. And as you can see, it was profitable. In summary, the Trending RSI aims to enhance the traditional RSI by adding trend insights directly into the oscillator, addressing the gap that the traditional RSI leaves regarding market trends. This version of the RSI breaks away from the 0 to 100 range, offering bands and a center line that better represent market conditions. If you have any questions about this indicator or this strategy, be sure to let us know in the comment section below. That's everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.